we started. We're 4 years old, and we said, we wanted to provide people and businesses gold-backed financial tools, right? Gold-backed finance. So basically, financial products that were backed by real value and not backed by the rand.
Welcome everyone to How Would You Build It? My name is Bobby Sequeira and my co-host is Renier Creel. And today we have Dane Viljoen from Troygold. Guys, welcome to the show.
Thanks, Bobby.
Thanks, Bobby. Thanks, Steve. It's good to be here.
Cool. Glad to have you guys here. And it's a very interesting time to be having a conversation if we're going to be talking gold, because for everybody that's been watching the news, they would have seen a very specific story come out about some Russian weapons that were sent to the Russians. And we saw the South African rand tank on the day. So I just wanted to get you guys' thoughts on this bombshell of a news story that kind of came out. Renier, if I start with you, just what's your general thought on what's going on in this kind of whole situation?
Look, this isn't a political podcast, so we're not going to dive into the politics of it, but the economics of the whole thing is,
Exactly.
whenever something hits the news, it tends to have a bit of an impact on specifically the South African currency, at least something of that magnitude. And, I think that's where something like gold has a very interesting role to play. And, I think, as the rand devalues, all of us lose our wealth. If you have wealth stored here, if you are smart and you have it stored in multiple places, I guess the impact is more limited. But it definitely has an impact on all of us in a lot of different ways. So not great when something like that hits the press. But there are ways to mitigate that, and I'm sure Dane has some ideas.
Yeah, I think the sort of if we can call it a Russiagate scandal, I think it's sort of one of the other foot faults that politicians, specifically our politicians, are making. And many people will say, what's the why would it affect me? I mean, it's you're just a sort of a working citizen of the republic. But I think one always has to look at the first order and second order effects of an action by a state or the government or the politicians, because it has an impact on the national currency. And the one thing that connects all South Africans is we're all using this paper ticket or note called the rand, so the paper currency of the country. So whatever they do, even though you haven't met them, they impact your life, and specifically they impact your monetary condition. So you as a producing unit in a society, you are working and you're investing your equity and your energy and your sweat to produce value, and you sell that value, and for that in return you're getting value in return. But we live in the age of fiat currency, right, which is a currency that we all have to accept by decree of the government. So we get that in return, and that's basically our savings. We're saving that value that we worked for. And if that currency or that savings tool is affected by government and political, the actions of politicians, then you have to be mindful of the effects it would have on that currency and vis-a-vis your wallet, your family's savings, your family's wealth. So gold obviously is the best security and insurance and value store for wealth when it comes to comparing it to fiat currency. But I'm sure we'll get into it for a second.
We're going to dive into all those kind of macro kind of conversations. I think what's important to understand, and I think for most people, the best way to explain what happens when the currency goes is the petrol price. I think that's the first thing that everyone kind of feels the immediate pinch. And so we're obviously going to be buying our oil at 19 Rand to the dollar now. Renier, just like, what is that impact going to have on kind of people's spending habits and kind of, for people like Dane that are starting these startups and now have, a lot less money to work with because of inflation?
Yeah, well, it's just a sign of the times we're living in, and I don't think it's truly unique to South Africa. We've got an extra spin of how our politicians handle things, but I mean, globally, the pressure is on everywhere. So, we've seen the gold price rally quite handsomely recently. And, there are a lot of people saying, well, Bitcoin is the new gold. But between gold and, Bitcoin, Bitcoin's price has stayed relatively around the same mark for some time now. whereas gold has actually proven to be once again an inflation hedge. So it's interesting times, that's for sure, globally, and South Africa. With the current happenings, maybe we have it a bit worse, specifically with stage 6 load shedding. But ultimately, in the long term, these things go through cycles, and you have to think to yourself, like, where are you in the cycle? Are you are you going down or even lower than the cycle is going, or are you making some smart moves and staying above the water here? And I think that's the real important thing. And they years ago, if you were in the 1950s depression, like, you would go under unless you were extremely wealthy. And I mean, I'm talking about like a handful of people in the world at that time that could avoid some of the pain. And these days there's a lot more opportunities for people to actually hedge themselves against some of these risks, some of these external risks that they have no control over. And also, it's interesting, like, I just saw yesterday some of these luxury brands, the Rupert's, what is their company called?
Richmond.
Richmond, yeah, they've had fantastic results, and that's the sign of the times. Like, if the economy suffers, the rich people aren't really impacted because they hedged against these things, right?
Yeah.
So it's really important that the middle class and some of the other people also understand these mechanisms and understand these things that they can do to hedge themselves against these external factors.
I think what's interesting, and Dane, you touched on it, like, kind of store of wealth. I think what's an interesting fact around gold is that it's been traded for 5,000 years. Rand and fiat currencies, as you called it. These are relatively new concepts, but people have been trading in gold for 5,000 odd years, and hence why we look at it as a way of having wealth. Dane, in terms of the gold performance in the last couple of years, specifically since COVID, we've seen the spikes. Do you want to just give us a round out of, like, if we had invested in gold in the last 5 years, how would we have performed?
Yeah, sure. I think I think there are two elements to it. Obviously, the gold price performance, which you're referring to, and what Renier is talking about, hedging yourself and your finances and your wealth. You're hedging it against inflation, right? So I think if I can maybe break it down into inflation and then gold and how it's performed against the rand. So inflation is public enemy number one. I think we easily forget this as consumers and even businesses. You mentioned a startup, no matter how big you are as a business. Inflation is your public enemy number one. And as investors, or as consumers, businesses, investors, we suffer from that inflation illusion, right? So we don't know how destructive inflation can be over time because it is invisible and it is pernicious. So inflation it erodes your spending power. It is, as Milton Friedman said, it is a tax that you don't require legislation for. It is effectively the expansion of the money supply. So if we look at the money supply in South Africa of the rand, when the Reserve Bank increases the money supply, you've got more of these paper tickets bidding for real goods and services in the economy, and that creates an effective inflation, which is rising when the prices of things rise. So inflation is the expansion of the money supply, and what that means is each individual unit loses its purchasing power and loses its value. So you, as an individual, you can buy less consumer goods. As a business, you can, you're on a purchaser side, you can purchase less. So I think inflation is the aspect that sort of the tide that pulls you back in terms of your value creation. If you look at a 6% inflation rate, right, and in South Africa, inflation has averaged 5.4% over the past 108 years. It's an Old Mutual long-term perspectives report that mentioned that. If we take 10,000 rand today at a 5-6% inflation rate, in 10 years' time, you've halved the purchasing power of that. You've got 5,000 rands worth of value. In 20 years' time, in 20 years from now, you've wiped out the value of that savings, right? So you have to hedge against that to protect your wealth and the value that your business or you have on your person. Now, I think in terms of gold, I think there was a good article in MoneyWeb a while back where it said all that glitters is gold, and I think gold is how we define it. we actually define it not as an investment. It does not carry an income yield or a dividend. It is a money. And you mentioned all different types of monies in the past. And if you look at, for the past 5,000 years, human civilizations have used various types of money, but they've all sort of, in a consensus mechanism, reached the conclusion that gold, because of its metallic properties, is the best store of value across time. So a Roman citizen, 1,000 years ago, with 1 ounce of gold can look after a family of 4 for a month in terms of purchasing power. And today, for 1 ounce of gold at 40,000 Rand can still look after a family's needs for a month. So it basically, gold is money, and it can translate value across time. So it's a parking spot and it's a store of value for value for money. So in terms of performance, I mentioned it's not necessarily an investment. So it's tough because it doesn't have an income yield. It's tough to say that gold has performed or has yielded X. We as Troygold, we always say, it's a money and it's a savings mechanism. It's not an investment. There's no risk to it. You're storing your value. But it is interesting to note that if you look at South Africa over the long term, and again, I'm going to reference Old Mutual's long-term perspectives report. There was one for 2022, and I urge some of the listeners to go have a look. Gold was fixed up until about 1967 in South Africa in terms of price, but after that, its price had floated, and it has returned 13.6% a year since 1967, when the Kruger Rand was introduced as a bullion coin in the world. So that return, even though that's a return generated by the depreciation of the Rand, gold has sort of stayed constant purchasing power. 13.6% a year, the compounding yield since 1967 has only been beaten by SA equities. And you'd think so because obviously there's an introduction of risk there. So gold has, proven its mettle in protecting the South African consumer and the business over the long term. And especially, maybe the short term, in the short term specifically, especially since, COVID, right? So you look at gold in USD terms, about 2019, gold was about $1,300 an ounce, and it shot up to $2,000, just over $2,000 an ounce during the pandemic COVID times. It came down to about 1,800, and now, as a result of the bank failures and sort of the persistent inflation seeing with bad geopolitical situation and the war and uncertainty, we've seen it reach about $2,000 an ounce again. So in gold price terms, the past 5 years, gold is down about 55%, 56% in terms of performance. But what's particularly interesting in a South African context is over the past 5 years, 2019, the gold price was 18,000 Rand an ounce. It's sitting at 39,000 Rand an ounce. So it's actually, in the past 5 years, it's done 142% compared to the Rand. So you have lost, you've lost, 1.5x your purchasing power if you were just sitting in paper rands, but you would have been fully hedged out in terms of gold if you converted your fiat currency into real money, into gold.
Yeah, it's interesting. A lot of people don't understand the term fiat, but it's the Rand, it's the dollar, it's the sterling, it's the Deutschmark, whatever it is. So if you've just sold everyone on the performance of gold, Renier, are you sitting in some gold bars under your mattress, or how?
Well, I think that's,
how do you export your wealth?
Well, that's the thing, right? I mean, we've got people that are gold believers that buy gold, and then we have the young people that believe in that concept of having an alternative money source, but they tend to go for Bitcoin and Ethereum. So, I'd love to hear from Dane as someone who grew up in the age of where we saw the rise of Bitcoin. How did he end up in gold and not become a Bitcoin maxi?
That's a great question. I think it's mostly my background. I think I'm going to give away my age a bit, but when I was in uni, I was born and bred in Pretoria, and I got a chance to go. My dreams always sort of Wall Street investment banking. So I got a chance to study in New York actually, and around that time was, as fate would have it, around the time of the financial crisis. So I was lucky enough to be I'd walk to class and I'd see sort of the end of Fed rallies and the 1% rallies. And that's when they introduced the TARP programs, quantitative easing, which, for anybody listening, quantitative easing is just inflation. They print money to buy government bonds. So they're just increasing the money supply. So at that stage, this was pre-2011, so Bitcoin didn't even exist yet. But and I was brought up, I think, with sort of the principles of sound money and Austrian economics and free markets. So your von Mises, your Friedrich Hayek. So I read a lot of that stuff, and I remember fighting a lot with New York professors about what's the best personal savings tool for somebody going through that. So I think I saw a lot of the central bank's sort of monetary policy in action, and I came back to South Africa and I worked in banking, and then actually the idea of sort of, I guess, studying finance and economics side for me was an understanding of sound money, limited money supply, self-sovereignty. So it was at that stage it was gold, and I think if you look at economic cycles throughout history, the booms and busts come, but we do end up as a civilization reverting to sound money and sound savings, so something that is a store of value. So I felt that almost ideologically drawn towards gold, and that it was a metal that was literally kept in the dark and stored in the dark. We had iPhones, we had WhatsApp, Instagram, Facebook, and you were used to these user experiences that were quite digital. But when I wanted to, I was working in Joburg, and when I wanted to acquire gold, it felt sort of wild west. I had to drive to Germiston in the middle of nowhere. I remember I didn't even have my own car at the time, and I was sort of hightailing it out there with a gold coin after my first few salaries in Joburg.
Yes, that's brave, Dane.
And I thought to myself,
now
there's got to be a different way to access ownership in gold. This will be needed in the world. I think young people, old people, I think we will revert to a gold standard of sorts, a currency or a medium of exchange that will be gold backed, if not gold. And so I think that's where the idea of Troygold came. And then obviously Bitcoin, we love the technology. The market is trying to solve for alternative monies and alternative currencies that isn't at the mercy of government spending habits and the printing press. So we like the idea of cryptocurrency, we like the idea of Bitcoin, but we do feel that Bitcoin is still unproven as it relates to a proper store of value. There's a lot of speculation, sort of people trying to hold it just so that they can sell it for a higher price, get rich. You're not holding it as a reserve currency in your personal balance sheet, or you're not seeing governments and central banks buy Bitcoin. They're buying gold to hedge themselves. So Bitcoin is a great technology. Blockchain is a great technology, but we favor gold, as the best money. I think Bitcoin Bitcoin has utility, transferring value instantly over distances, and I think it will morph into a few things. But at the moment, we're part of the crowd that says, gold's still the best money, but we like watching the developments on the other side. But our niche is gold-backed finance, gold-backed financial services, and easy digital access into owning gold.
René, I can't help but, if I think about our guest from last week, we also spoke finance. It was easy equities, and we spoke about shares and stuff like that. There's this constant element, and we're talking, and I mean, there's three of us on the call, and I know we're all into it and we understand financials. But René, just like, what's your view on like everything that Dane has been explaining to us, like the difficulty of building products, or kind of going into a braai and starting to talk about these things? It's a challenge, right?
Yeah, well, I think the first challenge is, most people in South Africa think that, well, they don't understand what fiat is, and they think, money is money, and it always has its value. It's absolutely guaranteed, and that's the hard thing to get around, because it's quite an abstract concept, right? We grow up with, 50 rand is 50 rand. So now all of a sudden you're telling me it might not be 50 rand. Well, what is it then? It's like, okay, it's underwritten, it's a loan. Basically, it's a central bank telling you, we back that thing is worth something, right? And I mean, that is actually so bizarrely risky in the context of a lot of stuff that's going on in the world. It's crazy. Yet, I mean, it's a system we all grow up in, and it's a system we understand, right? So now all of a sudden, bringing forth a narrative to say, well, it's almost something out of the Matrix to go, well, the money you thought was money is actually not money, right? And then proposing alternative is quite tricky. So I think from a marketing perspective, and Dane would have felt this for a long time, is like getting this message across is really complicated. And more than that, if one, which is what I'd love to hear more about from Dane's side, is like, if you were to build a neobank that is, gold backed, like, I mean, how do you get people to understand, like, you don't have rands anymore, you now have gold, like how does that, how does one do that, Dane?
I think that's a fantastic question. I think it's something that we've dealt with at the coalface for the past 4 years. I think the best way to look at that is education is one aspect, right? Let's look at the mantra and the mission of Troygold when we started. We're 4 years old, and we said, we wanted to provide people and businesses gold-backed financial tools, right? Gold-backed finance. So basically, financial products that were backed by real value and not backed by the rand. So we always say easy and safely trade, upload, borrow against, and spend, directly allocated, securely vaulted, physical gold bullion. That's sort of our mantra and our slogan. I think what that means is that you're rightfully so. You are targeting and you're speaking to people that have started being educated, and that have sought to understand how monetary economics works. So for us, it's targeting that sort of the initial adopters, and the ones that have psychographically an idea of, I don't quite trust what's happening here with my rand. I don't quite trust what I'm seeing in terms of what global central banks are doing. And I'm cognizant of what's happening with regards to the introduction of Bitcoin, and these alternative currencies. So in terms of how do you launch, or how do you start a neobank or financial products in an alternate sort of currency, I think we got lucky in the sense that I think Bitcoin has educated a lot of people. I think the idea of alternative currencies and alternative monies, creating this marketplace where we don't have to just think of our rand as the only currency or money in an economy. What about the alternatives outside the banking system, outside traditional financial system? I think that drive, we're talking about the Peter Schiffs, the Michael Saylors, the Jim Rickards of the world. They've done massive work, Mike Maloney, in educating people. So I think for us, it's not a educational drive. It's just, putting the right product and putting the right content out there to attract those that are already seeking truth and already seeking an alternative. But it has definitely come about by, what the shenanigans that the central banks have done since the financial crisis. So it's very tough. It's tough to reach our consumers, but we try to look at the communities that understand and that seek to understand it in a nutshell.
Yeah. And that's tough. We've spoken about it at length on this podcast. We speak to people about it as well. I want to understand from a regulation point of view, right? Because we always talk about regulation when we tie it up with Bitcoin. But what's the regulation around owning gold? And obviously, you're trying to kind of digitize it on your app. So, I mean, I downloaded your app and I got asked for a lot of verification. So there's clearly a lot of regulation or something that you need to give to be able to own this. Can you just explain that situation or the concept?
Yeah, absolutely. Yeah, I think when people think gold, there's a tendency to think clandestine sort of things happening. That's definitely not the case. I think in South Africa, we were the pioneer of the first bullion coin in the world. Our bullion being the Kruger Rand. In 1967 we released it, and it's still the most traded coin globally, physical bullion coin globally. I think it makes up 60% of the global market, and it is a modern marvel because we developed it, and it allows, bullion is the gold content is the value of that coin. So there's no face value, and if you own that, it's also a legal tender in South Africa. And it was first bullion coin, and it was there to provide the man on the street a savings tool in gold, right? So in terms of the laws, South Africa created this great technology, the Kruger Rand, bullion Kruger Rand. Anybody is allowed to own it. Businesses are allowed to own it. Individuals are allowed to own it. From a regulatory perspective, because it is legal tender, the Kruger Rand bullion coin is legal tender. So it functions mostly much like you adhere to much of the SARB and the FIC regulations around licensing, and they need to understand, FICA and KYC for the owner. So the flow of funds is important. So for us, we are a registered Kruger Rand dealer in South Africa. We're also a licensed credit provider. If you come onto the Troygold app, you can download it on the App Store and the Play Store. The key is here: you can own full legal title of a fraction of a bullion Kruger Rand coin, or full ownership from 6 decimal places. So effectively, from 1 Rand and up, you can have co-ownership or full ownership in Kruger Rand coins, which we store with the global provider Brinks. And it's fully insured. We store in Johannesburg, and within a few minutes, you can be an owner of physical gold, and you can also redeem it. So you can actually come and collect your coins once you have a 1 ounce and above. To get in, we have standard KYC processes, much like any fintech platform. If you look at the crypto exchanges, if you look at Easy Equities, it's within a few minutes you do create an account. You've got your selfie, front and back of your ID, and we verify that to a third-party provider so that you are who you are. And we accept EFTs, so bank transfers. So it's all in line with the governing regulations that govern fintechs in South Africa. So it's pretty standard. But gold ownership is gold ownership has been celebrated in South Africa for a long time. We come from a culture, and the Kruger Rand has been the perfect instrument.
Yeah. I think what's interesting is, like, you speak about the bullion being the first Kruger, or the first gold that was traded. Robert Kiyosaki, the author of Rich Dad Poor Dad, he has a story about being in Vietnam, fighting the war, and then going and buying gold, and it was a Kruger Rand. He loves that story. I don't know how many times I've watched where he's spoken about that. So that's super interesting. I think we come from that history of it, and like South Africa comes from a really rich nation of having a lot of gold, like literally having a lot of gold. But in recent times, we're not I think our minds are running dry. So I'm just curious about, like, the fact that you've got a vault, I'm assuming, where all this gold is. How does that all work? The fact that you've got a gold vault, and where's the gold coming from?
Yeah, that's a great question. I think it comes from that story I told about first, buying my first Kruger Rand with my first, I can't remember how many salaries that took me. So what we do is we effectively, how our system works, sort of under the application, under the hood, we acquire 1 ounce bullion Kruger Rands either from the source, so Rand Refinery, or other primary dealers in South Africa, and we store it in a custodial vault. So we use a Brinks vault in Johannesburg, and there's Lloyd's of London insurance on that. And Brinks is the biggest sort of gold and diamond precious metal storage company in the world. So it's sort of blue chip. It's an American company listed, and they've been doing it for 20 years. So it's sort of the best in class custodial side, and then we acquire the Kruger Rands. So we put it in the vault, and then our system, our technology, is effectively a central registry that fractionalizes that 1 ounce bullion Kruger Rand. So we split it up into about 1 million pieces. So I said, 6 decimals in terms of ounces. So you can acquire either full ownership or fractional ownership. So we work on the legal mechanism of co-ownership. In South Africa, it's like co-owning a house with a title deed. The title deed where you have 2 owners or 3 owners in a house is title deed. Similar concept. So the Krugerrands are stored, they're audited, and they're insured inside a Brinks vault. And then we have a central registry, much like a blockchain, but a Troygold central registry, which we then keep track of all the ownership of the ounces that are stored there. And we make that available for sale to everybody on the application. So you can go into the application, you can buy and sell 24/7 any amount of real physical gold. With every transaction, we actually produce an ownership certificate. So you have an ownership certificate that tells you how much you own, in which specifically numbered Krugerrands you actually have ownership. And as soon as you go over the 1 ounce threshold, the technology locks that Krugerrand and it's yours. You can come and take it, or we can courier it and send it to you. So we basically have tried to, based on our personal experience, we've tried to make acquiring physical gold in any quantity as frictionless and easy and as digital as possible. And then we also offer, we've started with gold-backed financial services. We offer a sort of instant liquidity credit facility against your gold. So if you have 100,000 rands worth of gold Krugerrands, you don't want to sell it. We offer 75% of that in terms of the credit facility that you can extract liquidity from. And we also bolted on a Troygold MasterCard. So it looks kind of like this. Gets sent, and you can spend that liquidity anywhere in the world. 40 plus. Wow. So we call it living in gold, and that's part of the building blocks of a gold-backed neobank that we built and we continue to build.
Renier, what do you think Dane's biggest challenges are? Because I'm thinking about financial advisors and institutions. They're kind of, buy my product. What do you think Dane's going to have as a challenge in this world?
Yeah, I think, the big reason why crypto and DeFi and all of that stuff picked up, a large degree of it, and the DeFi purists and crypto purists might hate me for saying this, but it was the world's biggest casino. And, and I think there's a part of this gold thing that doesn't have this casino aspect to it, which just makes it unattractive to all the moon boys. So, I think the biggest challenge is we don't have a culture of saving, and the problem is that the capitalistic system, to which most of the well, at least which we are exposed to, is incentivizing and encouraging people to spend money and take on more credit, because that's what keeps the system going, right? So a person who's saving is not good news for the GDP. The GDP can't grow if you put money away. So, you have these forces that are fighting against saving. Also, on the one hand, understanding savings necessary, but you know what? They'll just print more money for the people who can't retire until the system breaks. So I think the biggest challenge really is it's finding that messaging and that education piece that actually gets the people across the line to go, you know what, we need to look at this differently. And I actually think I was wondering why we're talking. Dane, let's go back a few years and imagine we're in Zimbabwe and Troygold is up, and there's hyperinflation and everything goes crazy. What role does a Troygold play in that? Can it actually become the viable solution of everyone just using that as a bank and as a store of value and as a mechanism to trade? Is that what it could become in a situation where there's hyperinflation?
Well, I think it's a great question. I think obviously our intent is to just give an alternative, right? So, we mentioned it, obviously we talk about not having all your eggs in one basket. And we have seen, we live in 2023, and we have seen, even today, as recently with, Signature, SVB, the bank failures, First Republic in the US, and in 2008, we've had it as well, where we see people's fortunes and wealth get wiped out overnight because they held their value in a trusted institution, which is a bank. So I think what I don't think we're saying we could be the savior when currency inflation accelerates and runs away. I think we definitely say there's an alternative to keeping your money in the bank. Think of it as your physical gold account, and when you look at the current sort of the high interest rate environment that we're in, the days of free money and zero interest rates are effectively gone. So inflation is here to stay. You've got central banks, keeping the yield curve high. And I think what that means is if you have your money in a bank, regardless of a bank failure, as you mentioned earlier, it is an IOU. It's not your money anymore. The bank lends it out to create assets for the bank. So it's an IOU, and you have to ask for that value of that money back. And once you put it in the bank, if we look at the current inflation rate with the current yield curve or the current savings rates, you've got a negative real interest rate. So you're going back, you're taking on the bank's balance sheet risk, and you're getting, in real terms, a negative return on your money there. So I guess what we're saying is you do need to pay for goods and services with the national currency. We always say keep 3 months worth of currency in the bank or in cash management, 3 to 6 months worth. But take a portion of that and make sure that you put it in something that looks and feels like an alternative, but that's backed by actual gold. So I think the world is, and you mentioned the crypto side. The free enterprise system is creating alternatives and competition to just banks and the national currency. And we just want to put our hand up and say, we're one of the alternatives. Take a portion of your value and make sure it's in something that is backed by the real thing, that's digitally friendly, and then specifically also that you can extract that liquidity. It's tough, if you're buying gold and holding on your own, you have to try and sell it. We've got the credit facility that's instant, and we're working on some really great other financial products that are backed by real value. So yeah, it's most certainly, I think, in a Zimbabwe perspective, we're seeing them try to use gold again. These tools are available. These tools are here. So I think we're one of the alternatives. But we want to make sure that the people that need gold and believe in gold and trust gold can access it like they can on Troygold.
Are you allowed to talk about the productization that you're busy planning?
Yeah, I think, look, it's as a startup, you guys know it all too well. You're always trying to innovate and use speed to create something that you can add to the product stack. We've got the core of a financial suite. We've got savings and gold, and we make it. You can fractionally buy any amount of the physical. You can redeem it. You can get it. We've got lending, so you can borrow against your gold. We've got the payment side. We are looking at an insurance product. I think when I retire in, call it 30, 40 years, I definitely don't want to be paying to get rands back at the end of that. So we're looking at something like that. So that's an exciting opportunity for us. But it's still early days and still in the works. So if people go to www.troygold.app, there is we'll post on our social as well. Troygold app. We'll post a lot of our updates on products and things there. So, but awesome. This is exciting, and we're happy to be living in this time.
So, René, any last takeaways that you want to get from Dane before we say goodbye?
No, I think it was a really exciting conversation, Dane, and I know you love reading our newsletter, so it's great to have someone from our community on our podcast for a change.
We do share it far and wide. I must say, it's the best sort of condensed, especially if you're in a startup. It condenses all the happenings of today. So you don't need a plethora of other sort of nuggets and I definitely it's been great for us in the office, and we tend to share it.
So Dane, what would you add as a message to other readers or founders that are reading the open letter? What would you say to them?
Well, I think what the biggest lesson we've learned is community, is getting into conversations with people that are in that space, especially the startup sort of space. I mean, this came about, I met Renier and we just had a discussion over a coffee a while back, and so I think connecting into that community, especially the South African fintech and startup community, I think is crucial. And so you've got to be aware that those eyeballs are, those people are, because what we've seen is the collaborations and the value, sort of the synergies, value synergies from that is crucial. So and it keeps you up to date. So be part of the open data community and get to the events. Renew's done some great work speaking at some of the events. So attend the events, start reading the same stuff, and then start speaking to them, because we're all experiencing the same type of challenges.
Yeah. Okay. Yeah. So stay tuned, everyone, because I think that is in the pipeline, Aaron. Yeah.
Yes, coming up.
Coming up. Okay. Well, awesome, Dane. It's really great to have you have joined us and tell us about Troygold. You've sold me. I know that from an investor point of view, my rand isn't gonna do much for me, and I'm looking at the gold and I'm feeling very bullish about it. So, thank you very much for sharing your insights.
Thank you, Bobby. Thank you, Neil. It's been great.
Cool. Okay. And Renee, I'll see you next time.
Thanks. Bye-bye. Thanks, Dane.